News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Lisa Mateo.
Lisa, we begin with a milestone. In the second presidency of Donald Trump, the president marked his 100th day in office with a rally in Michigan, automotive country.
After decades of politicians who destroyed Detroit to build up Beijing, you finally have a champion for workers in the White House. And instead of putting China first, I'm putting Michigan first, and I'm putting America first.
President Trump told the crowd in Warren, Michigan, that his program of sweeping tariffs will unleash economic growth and bring back manufacturing jobs. And he says it's already paying off.
Inflation is basically down, and interest rates came down despite the fact that I have a Fed person who's not really doing a good job, but I won't say that. I want to be very nice. I want to be very nice and respectful to the Fed.
President Trump's rally came hours after he signed a bit of relief from some of his tariffs for the auto industry, including a 2-year reduction in 25% duties on foreign parts for cars made in the U.S.
But Nathan, President Trump is sticking to his overall tariff plan, including 145% levies on Chinese imports. In an interview with ABC News, the president said he does not think they'll hurt American consumers.
China probably will eat those tariffs, but at 145, they basically can't do much business with the United States. And they were making from us $1 trillion a year. They were ripping us off like nobody's ever ripped us off.
Well, still, the president acknowledged the tariffs amount to a near embargo on trade with China. He says Beijing deserves it.
And Lisa, reaction is pouring in this morning to President Trump's speech and his first 100 days in office. Jeannie Sheehan-Zaino is a political contributor at Bloomberg.
His support and approval in terms of his handling of the economy has dropped in this last 100 days. And that's why he's attacking the pollsters. And I think he's really missing an important opportunity. This is his first time on the road since he became president, his first big rally in a swing state, to explain to the American public this thing that he cares so deeply about, which is tariffs. He reiterated again to these interviewers in the last few days. He is deeply committed to this tariff regime.
And Bloomberg political contributor Jeannie Sheehan-Zaino notes the polls show voters wary of President Trump's economic agenda. In Michigan, Trump dismissed the surveys as biased against him.
Well, Nathan, Amazon says it will not display the cost of U.S. tariffs on products. That's after the White House blasted the reported move, and President Donald Trump called Jeff Bezos to complain. Speaking outside the White House, Trump described his call with the Amazon founder.
Jeff Bezos was very nice. He was terrific. He solved the problem very quickly. And he did the right thing, and he's a good guy.
Well, that rebuke was sparked by an earlier Punch Bowl News report that the e-commerce giant would soon begin displaying the cost of U.S. tariffs on individual products next to the total listed price.
Well, Lisa, we may be starting to see the cost of tariffs on China now. The country's factory activity slipped into its worst contraction since December of 2023. Economists are calling for a speedy policy boost. Some are forecasting a significant economic slowdown this quarter that could trigger more stimulus.
And turning to the markets, futures lower. This is after a 6th straight day of gains on Wall Street, and it'll be another busy day for earnings with 50 companies in the S&P 500 reporting, and they include 2 of the Mag 7, Microsoft and Meta. Let's get a preview from Bloomberg's Tom Busby.
Microsoft is expected to post positive results, but there are concerns that growth in its Azure cloud computing unit could be at the low end of guidance, signaling a further deceleration in the fourth quarter amid a slowdown in data center and AI spending. That's after it canceled leases on new server farms and slowed construction on land it already owns. Bloomberg consensus calls for revenue of $68.48 billion on adjusted earnings per share of $3.21. Tom Busby, Bloomberg Radio.
And that's news when you want it with Bloomberg News Now. I'm Nathan Hager.
I'm Lisa Mateo, and this is Bloomberg.